the only place that you can go really from a corporate perspective is just climbing up the corporate ladder. And I started having second thoughts and I started experimenting with different things. And my biggest goal at that point was just to make more money. One thing that came on my radar was stock trading. I had finally figured out how to place a trade. And I placed the trade and I totally forgot about it because I wasn't like actively trading. I was just messing around. And later that evening, I checked my phone and I made like several $1,000s.
What's your favorite investment vehicle for cash flow that you're participating in now?
The biggest thing that I enjoy in investing in is, first of all, watches. Second of all, jets.
What's your advice for a 20-year-old that's working for corporate America that wants to go into entrepreneurship?
Congrats on getting beyond $1 million. What got you here won't always get you there. This is a podcast for entrepreneurs who want to reach beyond their 7-figure business and scale to 8, 9, and even 10 figures. I'm Brad Weimert, and as the founder of Easy Pay Direct, I have had the privilege to work with more than 30,000 businesses, allowing me to see the data behind what some of the most successful companies on the planet are doing differently. Join me each week as I dig in with experts in sales, marketing, operations, technology, and wealth building. And you'll learn some of the specific tools, tactics, and strategies that are working today in those multi-million, 8, 9, and 10-figure businesses. Life can get exciting beyond $1 million.
Austin Zelan, thank you for showing up, man. It's great to see you.
Thanks for having me. I'm excited to be here.
Yeah, welcome to Austin for the first time, apparently.
Yeah, my first time in Austin. You know, it's definitely a city that I've always wanted to visit. First of all, because it's the capital of Texas. I think that's pretty significant. But secondly, because Austin's my name.
Yep.
Yeah, I think it's cool. You know, it's definitely its own unique flavor. Not really what I expected, but it's cool.
It's ever changing.
Yeah.
Yeah. I mean, you know, I got here 10 years ago and it was a very different place then. But even then, people were talking about how busy it was and how it was growing and whatever. And like the last 10 years has been wild.
Yeah. Probably like a huge uptick in like tech oriented businesses.
Huge.
Yeah.
A huge deal. I mean,
it feels super techy here.
Yeah. Yeah. It, you know, through in particular, damn, we're just going to get knocked for saying on the air.
Uh-oh,
Oops.
the C word. Uh-oh, the forbidden C.
Exactly. Maybe we'll bleep it out so we don't get, you know, downgraded. During that era, we got tons of California and New York moving in.
Yeah.
And it definitely changed the culture to some extent. And some of those people turned around and left afterwards. Mm-hmm. But I think, you know, like any city, it's just, it's ever changing. And for me, it's like the right size. It's 1 million+ people downtown.
Yeah.
Which is enough people where you're going to run into the folks you want to see, if you want to see them. Mm-hmm. And if you want to avoid them, you can too.
Yeah.
Yeah, for sure.
That's funny.
Yeah. So anyway, welcome here. I want to talk about a bunch of stuff, man. We met a few years ago through a mastermind, and you are an interesting character. You've done a few different things from a business perspective, but one of the things that I like is the transition out of corporate. And I've got a number of friends that have done that, but I think there are more attractive paths today to get out of a corporate job and jump into something on your own. Mm-hmm. Let's start there, and then we'll talk about kind of the current Zelan Consulting Group and what you're doing now.
Yeah, definitely. So, I mean, when I was in corporate, I was very young. So I kind of like leapfrogged my way in there. I figured out that what all these tech people were doing is that they would get a job and then they'd use that experience to like leapfrog into another job within a year or two and get paid significantly more, and then do it again and do it again and do it again. And I figured that out very early, and I was like, oh, interesting. And my goal at that point was I wanted to get paid something significant, because my previous job, I wasn't getting paid much at all. And my biggest goal at that point was just to make more money. And so I was like, okay, this seems like a pretty good strategy. So let me see what I can do that. And so I ended up making it into corporate pretty young. And at that point, I realized that, you know, I didn't really know how I wanted my life to go, but that had been my target at that point. And so I thought it was my dream job. I was like, this is great, you know, and I enjoyed it for a while. It was cool benefits, cool office, like the whole corporate culture. I was surrounded by all these super smart people, which was fascinating to me, because it was like, wow, all these people are literally like, you know, Microsoft, VMware, Google, like they're working with these people. And it was very interesting for me to learn from them and also see how they're living their lives. And very quickly I realized that the only place that you can go really from a corporate perspective is just climbing up the corporate ladder. And I was like, okay, well, maybe this job isn't so great. And I started having second thoughts, and I started experimenting with different things, because one thing that came on my radar was stock trading. And I was like, interesting. What if I could learn how to trade stocks? So I started literally, I was in school at the time too. So in school, in corporate, and also in my free time, I would look at different stock charts and try to make sense of it. And none of it really made sense, but I was just researching it. So I did that for a while. And eventually I settled on Forex trading. So I decided that I was going to go ahead and try trading currencies from around the world, because it seemed fairly simple to do. And I thought it was something that I could manage in my free time. And so basically where that took me was me investing all my spare cash into these Forex trading accounts, trying to figure it out, stumbling my way through it. My first year just lost a bunch of money. But eventually something clicked, and I was like, oh, if only I follow a system, I manage my risk, and I don't over leverage, I could actually be profitable.
Why Forex?
Well, it seemed simpler than stocks. So stocks, at least my initial perspective was, okay, if something happens in the news to a stock, it can totally tank and I can lose a bunch of money, or it could fly up aggressively and I could, miss out on the move or something. So they felt very volatile. Whereas with Forex, you're talking about the whole economy of a country. It's if USD is going strong, it's because the US is doing well. You know what I mean? It's not affected by one single stock or one CEO doing something dumb and it making headlines, It just seemed less risky from that perspective. Also, with Forex trading, you're able to use a lot of leverage. So you could have an account and double it overnight. I definitely don't recommend it, but if you're way over leveraging, you could do that. You know what I mean? And so for me, it was my first experiment in that space. And I understood a little bit more about general economies than I did about a single company. I didn't want to sit on shareholder meetings and all that stuff. So that's kind of what drew me to it. Secondly, I had some friends who were beginning to trade Forex. So they showed me some of the basics of hey, this is the platform you use, and this is where you do your analysis, and this is the trading terminal, and this is how you deposit money, this is how you withdraw money. So that was helpful. And then actually the funny thing is, when it really got my attention was somebody showed me how to do it, and I was playing around with a demo account, which is basically paper trading. It's not real money. You're just kind of messing around. So I had finally figured out how to place a trade. And so I met up with another friend of mine, and I was like, dude, check it out. You can literally just place trades from your phone. And we met at Starbucks, maybe 10 a.m. or something, 11 a.m. And I placed the trade, and I totally forgot about it because I wasn't actively trading. I was just messing around. And later that evening, I checked my phone and I made several $1,000s. I was like, no way. I didn't even know what I was doing, and I made a couple $1,000s. Imagine
how old
if
are you
I
now?
knew. Oh, back then, 19, 20, something like that. Yeah. So it's I made a couple $1,000s, literally not knowing anything. Imagine if I knew what I was doing. Or imagine if my trade was just bigger. The same move happened. If I had a bigger trade, or maybe if I knew what I was doing, I could have made 10 times that.
Sure.
I was that would have been awesome in one day. So that was a pretty good day for me. And that's kind of when I was hooked. I was okay, there's opportunity here. And it started really painting a picture in my mind that there are people who know which buttons to click on their phone to make millions. And I was determined to become that person. So then came a whole year of losses, of course. But that taught me, perseverance and all that stuff, and not giving up, because I literally lost all the money in my account over 20 times. I don't even remember how many times, many, many, many times. But I stuck with it and eventually got consistent. And then I realized that the rise of automated trading was just beginning. So I found this group of developers who knew how to code things in trading language, basically, or trading code language. And I showed them my strategy. I'm hey, this is how I'm trading. It's pretty consistent. Do you think you could develop a software that does this automatically? And they're yeah, sure, no problem. So they did. And I was okay, well, and I'm still at Microsoft at this point. I'm okay, well, this is kind of scary. I don't know that I want to risk my own money, but maybe I could just go get some credit cards. So I literally went out and I got a bunch of credit cards, got the cash off of these credit cards, and I put it all into the account. I'm all right, well, at this point, I'm super young. If I lose all my money, I'll probably be okay. I'll make it back, or I'll file for bankruptcy or something. I don't know. But the potential win far outweighed my risk. I had I think 45,000 in the account. And so By the end of the year, my account had like made a ton of money, and I was like, wow, this is a real thing and I could really do something with this. So from there, that was like my first real business. I started licensing that software and stuff.
Yeah, well,
like
let's pause on that for a second. So basically, were you still in school at this point?
Mm-hmm.
So you were in school.
I was doing night classes,
but had a job at Microsoft during the day.
Mm-hmm.
And you were trading like on your breaks?
No. The market doesn't move during the day. So you have to trade markets that are really volatile and have a lot of volume, which is the London market and then the New York market. And there's actually a couple hours that they overlap. So I would start my trading day around 10 p.m. And so I actually had a very insane schedule at this point. So 10 p.m. until about 2 a.m. I would be trading. Between the hours of 2 to 4 a.m., I figured out that statistically speaking, nothing usually happens that's interesting. So I would sleep from 2 to 4 a.m. 4 a.m., I'd wake up again and I'd trade until 6. And then from 6 to 8, nothing really interesting happened anyway. So those two like time periods, I'd be trading, and the rest of the time I'd be trying to sleep as much as I can. And then of course I'd go to my job, and then not every night, but I think Tuesdays and Thursdays we had class. And so I had class as well.
Damn. So you get to the point where you have built the software.
Yeah.
It's working for you. What was and this is a question for like anybody that's kind of dabbling in entrepreneurship or thinking about doing it. Mm-hmm. What did you need to have happen to make the leap full-time out of Microsoft into your own gig?
Well, the number that I had in my mind was if I'm making 10 times as much as I am here in my job, I will be able to comfortably leave, because then I was like, okay, then at least even if my expenses go up, I'll have maybe a year or two worth of cash to find another job or do something else or figure out what I want to do or start a business. I probably wouldn't want to go back to corporate because this was like my great escape from corporate, is what I call it. I found a way out and I took it, and yeah, it was kind of a natural transition though. It's kind of like they put me on a project that was like super slow and it was just kind of getting boring and like just at the same time everything happened and this was taking off. So, and actually, quite frankly, it was a waste of time for me to stay there and be in the office when I could be building this business.
From a financial perspective.
Yeah, exactly. Yeah. Because I was making way more here. And actually, as soon as I left, I started making even more. And I wouldn't say that I started spending my entire day working, but just that little additional time that I was putting into my business created a ton more income. And I was so glad I left. It was kind of scary, but
I mean, that's how it should work. And of course it was scary. That's part of the gig. It also is scary spending everything you have in your account on the gamble of an automated trading bot.
Oh man.
Yeah, I mean,
you don't have to tell me.
That takes a unique character to do that. I mean, most people, if somebody said, let me just ask you, what's your advice for a 20-year-old that's working for corporate America that wants to go into entrepreneurship?
Well, I wouldn't recommend doing what I did, first of all. I think that was very risky. But for me, risk is, I think, relative. For me, it was worth it. I would rather take that risk and at least have a chance of success and seeing way more success than I was seeing in Microsoft than for me to not take that chance and then wonder. You're like, oh, well, maybe it could have worked out, or oh, maybe I would have made money. I would rather know for sure and at least give myself a chance. I'm always a fan of giving myself a chance. I like to bet on myself. And if I'm not giving myself an opportunity, I think I'm cheating myself of potentially something great. And so my advice to somebody starting out though is take chances, but maybe be a little bit more calculated than I was, because I was just I'm going all in. If I can leave this office, great. So no, it was cool. But I would say there are things that you can invest in that are backed by real assets. So for example, one of the things that we do is we buy watches and we trade them. So you could find people that are selling their watch collection online because they need cash and they're selling it under market value. You literally could just buy those watches, polish them up a little bit, take better pictures than they did because they probably aren't professional photographers, and probably sell it for above market value. As long as it's a good presentation, you can sell it. And so just going through stuff like that, flipping things. And remember, your investment is backed by literal pieces of gold and diamonds. These are valuable assets. Your money is not going anywhere. The worst case, maybe you'll break even, but that would mean that you're also selling under market, which doesn't make sense. So I'm a much bigger fan of taking that route versus something like Forex, because in that case, if I lost everything.
Yeah, I tend to agree with you. I mean, I'm a huge real estate person for that reason. I mean, the majority of my time goes into real estate because there are other parts of this, but it's tangible.
Yeah.
And I like that element of it. And I like it not only because of the stuff that you just said, which is it can't go away, but I like to touch and see and hold and feel and experience the investment.
Yeah.
And most of my world is digital. So it's nice to have most of the, obviously easy pay direct, it's 1-0s, bank accounts, et cetera. Yeah. So I like the physical assets. So how did you make the jump? So you were in trading, you were in Forex, then you were like, I don't know what happened. Did something happen that caused you to think I need a different business? Where had it run its course? What was next?
Yeah. So the software, there was a certain point in time. I don't know how exactly I came to this realization, but it just hit me all of a sudden. I was all like, oh man, if this thing fails or it stops working or regulations change or the market changes or something crazy happens that I can't even anticipate right now, what would be my backup plan? I would have to go back to corporate. And that scared me so much. I'm like, oh man, like I should probably diversify. So I immediately started looking for other investments that I could put my money into, which was initially fractional oil wells, like ownership of oil wells, actually down here in Texas, and also crypto mining. So I was buying up miners and putting them in a warehouse that was being managed by somebody, and we were mining crypto. And it was going great. Like we're making good money with that. And eventually that ran its course too. But I kind of began building this financial moat around my investor status. So I was like, okay, I went from being an employee to being a full-time investor. How can I protect this status? So I imagine it as like this castle that I had built. And I'm like, how can I protect it? So I was like building this moat of investments or different things that I was putting my money into. So it's like, okay, if the crypto miners failed, maybe the oil wells wouldn't fail, or the Forex wouldn't fail, or maybe I should also have some real estate, or maybe I should also do exotic car rentals, or maybe I should also do online stores, like all these different things that I could find. And because I was making pretty good money with the software, I kind of had like the luxury, I would say, I honestly just got lucky. I had the luxury to invest into these things and not care too much whether they worked out or not. I was more of on an experiential journey where I'm like, let me see what it's like. Let me feel it out. Let me figure out what works and what doesn't work. And I wasn't so much like, okay, I'm investing into online stores, and if this Amazon store doesn't make me $1 million a month, like it's a huge failure. Like I didn't feel like that. I was like, I'm going to try it. Might work, might not, but at least I'm going to figure out what works.
I love that.
And so my goal was just to find the portfolio that works. And that's what I was building for myself. And then from there actually is where the whole coaching company came from, because people are like, oh, I've used your software and it works. Like what else are you doing? I see you have oil wells in Texas. I want oil wells too. And like after enough people started asking, I was like, okay, well, I'm not going to just like text people how to do this. Like, I feel like that would be a disservice to them, because if I just give them a couple of details, they're going to go try it on their own and probably fail. Like, if I'm going to show somebody, I'm going to show them for real. Like, let me educate you on what the real deal here is, like why I chose this oil well, why I'm working with this specific person, why I invested into these things, who are the vendors that I'm working with, what things should you be aware of, like what possibly went right or went wrong with my investment. And I basically made it into like a full-on coaching program. And obviously, that's where Cashflowpreneur was born.
One of the things that I think is interesting about that is a lot of people, when they want to dive into entrepreneurship, are diving in because they want a home run in business. Mm-hmm. And your transitional path was employment to investor. Mm-hmm. And the idea of trying things to build an investment moat is unique in its approach. And I think that probably, you tell me, but it sounds like it contributed to the mindset behind it's okay if it fails. Mm-hmm. Because with investments, it is a numbers game. And like you depending on what you're doing, some percentage are going to fail. Yeah. And this is actually, I think, a mindset that I got from trading Forex. Mm-hmm. Because at the beginning, the only reason that I was losing money at the beginning is because I would put such a large percentage of my account on one trade. I'm like, oh, if this trade works out, I can quit. Or if this trade works out, I'm going to make my first 100K day, or, whatever it might be. And so I realized after a certain point is like, okay, if I have $100,000 in my account, instead of me risking all $100,000 on one thing, mm-hmm. what if I separated it into 10 different things? And as long as 6 of them work out,
I'm fine. So I realized that there was actually no pressure for any one investment to perform. And so that really was probably the biggest mindset shift for me, where I realized that it's better to have a portfolio of things going at the same time instead of any one thing. And it removed that pressure from me judging myself based on the success or the loss of any one thing. So if any one trade didn't work out or it did work out, I wasn't judging my self-worth on that. I wasn't like, oh, I'm so good because did you see I made 30% last night on my trade, or like, oh, I lost 30% of my account. I separated that from myself. And so then I saw it more of a portfolio.
So the advice is that everybody should go lose money in Forex for a year.
No. I think you can just kind of take the cliff notes and stop judging yourself for the performance of any one investment in particular. And I think I see the same thing in business now. Like, as I'm going into like consulting multiple businesses, is that people put so much pressure on the performance of that one business. They think it's their baby, and if it fails, it's like, oh my God, it's the end of the world. Well, no, like, your worth is not tied to the success of that business, and your worth is also not tied to the failure of that business. This is an entrepreneurial endeavor, and if it works, great, let's add it to our portfolio of winners and add the next thing. And if it fails, great, that's just a pivot. We move on to the next thing. It becomes a lesson instead of a win.
That's cool. I like that attitude. I want to talk about some of the investments because I think they're fun. And then I want to talk the info stuff and onto consulting.
Definitely.
You mentioned a bunch of unique, fun investment strategies. And watches, they're sexy, right? Watches, luxury cars, jets. Real estate is the standard staple that's boring in that picture, but it's still fun depending on what you get. What's your favorite investment vehicle for cash flow that you're participating in now?
You're very right about the uniqueness and the creativity behind the investment strategy. And that was actually driven by what people were like telling me, because again, I had no experience, but people were telling me like, oh, you have to invest into blue chip stocks and not touch it for the next 30 years and invest into this real estate and do this and do that. And I was like, oh my God, that's so boring. So I kind of set out on the mission to find the most interesting investments that I could that made me happy. I was like, why can't I have this investment? Why can't I have that? It doesn't have to be boring. And I very much am against that mindset. And yes, there is value in stability and an established business and owning something like even a car wash. Like, yeah, it's not sexy, but it makes money. But then you can also have the more lifestyle investor things like watches, like cars, like stuff like that. So anyways, long story short, I would say the top performing investments, it just kind of depends on, even every category of investment has multiple strategies. Even real estate, you could do Airbnbs, you could do long-term rentals, you could do fix and flips. For me, the biggest thing that I enjoy in investing in is, first of all, watches. Second of all, jets. So basically, the idea is you buy a private jet and then you charter it out through a company, a charter company. And so there are certain models of jets that are more profitable than others. And I mean, it's cool. It's like a lifestyle thing. It's like, yeah, like I'm a part owner of a jet. You know? It's more than like, oh yeah, I have a house somewhere in, I don't know where, but where would be like a non-cool place to have a house.
Florida.
No. Well, Florida's cool. I have some houses.
Depends where.
Yeah. Like Gainesville. Like, oh, I got a house in Gainesville. You know what I'm saying? Nothing against Gainesville, but I like the more exciting investments. Like, oh yeah, I get to be a part owner of a jet. Like that's so interesting. And that's fun. And I want to have fun in my investment journey because I see all these investors who like take pride in their super boring investments and like, that's great. Like I can have those too, but I also want to own part of a jet.
So tell me about the breakdown of the jet and the jet model and how it works financially.
Yeah. Of course, it depends on the type of jet that you buy. Some people assume that we're buying brand new jets, which is absolutely not true because then we take a huge depreciation hit. But one thing that I found with luxury assets specifically, or trophy assets, you could call them, is that they have a very unique depreciation curve. So let's say, for example, and by the way, this is relevant across multiple industries, but in jets, let's say you buy a $10, $12 million jet. It's going to depreciate to a certain point. And that point might be 5 million or 4 million or 2 million or 1 million, depending on the model. And the reason that it stops at that point is because demand is so high. As soon as it dips below, let's say 5 million, somebody's very willing to buy it. Or, for example, the parts are in such high demand that just the body or just the engines, like they could easily sell for that much. So combined, the value is approximately 5 million, let's say. So that's where we come in, and we try to buy jets as close as we can to that number, because that way we know if we hold the jet for the next few years or 5 years or 10 years, it's likely not going to go far down in value. It's probably going to hover right around that amount. And so, as the years go on, some of them even start coming back up. So the equity or the depreciation curve bottoms out and it starts coming right back up, and jets go up in value. Of course, if you're buying it brand new, then you have to take that depreciation hit. But if you're buying it at that point, you're pretty safe for the most part. And afterwards, what you're doing is finding a charter company that has demand for that specific jet. So there are certain models that are just commonly requested. Like it might be a Learjet or like a Hawker or something like that. Those are very, very charterable jets because it's just convenient. It's not super expensive to run. Like it's decent charter prices. And so as long as it's one of those models and it's comfortable for people and people like it, it should be a pretty decent operation. Now, the charter company is going to take their chunk, the management fee. And by the way, they earn it. Like I know the back end operations of it, they definitely earn it because they're the ones bringing all the clients in. They're doing the marketing, the customer service. Like there's a lot that goes into it because people aren't flying private just to fly private, just because they're like, oh, well, I don't want to sit next to anybody. No, they expect like a supreme level of service. Like they want the top of the top of the top. Like they don't want to think about anything. Like they want everything done for them. And so that's the type of service that these companies are providing. So they definitely earn their management fee. And basically we're just either partnering up with people. So you could have 1 or 2 or 3, 4 people partnered up on a jet together. That way you have fractional ownership. Or we have some people come in and they just buy their own. So they're like, yeah, you know what? I have $1 million on a $5 million jet. I'm going to put 20% down, finance the rest. Part of the monthly revenue is going to go to pay off that loan. And then they're collecting some sort of net cash flow.
Where do you come in? You just mentioned sometimes people come in and want to buy their own. Are you consulting to help people do that, or?
Yeah. So through the coaching company, they see that we have people buying jets. And so some people approach me, they're like, hey, if you guys are going to be buying another jet, I'd like to participate in that. And so they can participate as a partner, or sometimes they just want their own. Like I have some people that just reach out to me on Instagram and they're like, hey man, like I see you're doing jets. Like I want to charter my jet. They might already have one. Or, hey, I want to buy one because I need to use it 3 times a month, but I also want to offset my operating expenses by chartering it in the free time. So many people do that, actually. It's a great way. Like if you don't look at it, again, if all your eggs are not in one basket and you're like, oh, this has to work and I have to make 50% a year on this jet thing. Like if you're just doing it to offset your costs, that's a great way to think about it because you're probably going to actually net a significant amount of cash flow, but then you're seeing it as a bonus as opposed to I have to make this money. So
yeah, for me, those things are sexy in the context that you just said, which is less as an investment, more as a lifestyle play, which is it's okay if it doesn't make money.
Yeah, exactly.
You've got some model around a bunch of those, and we could talk about all those, but luxury cars, similar, jets, similar. On the jet front, where does maintenance and insurance and the shitty part of that business model fit in?
Yeah, so that's actually all factored in into the numbers that we do. So we look at, for example, which jets require expensive maintenance all the time, or which jets are going to have more problems. And so we're not buying those. And secondly, we look for stuff that we have a affordable alternative to like sending it to the factory. So certain jets we can fix in-house. Certain jets we'd be like, oh, we don't really want to touch that. We should probably send that to the factory, to the manufacturer, which again is downtime. It's expensive. It's extremely expensive to fix them. But another thing also that is common is routine overhauls of the engine. So It's called engine overhaul reserves. So for some jets, every hour that they fly, we set aside $1,000 per engine for this overhaul to happen. Because at, let's say, 4,000 hours, they're going to literally need to be overhauled. They take apart the engine and they build it back together. It's like a rebuilt engine, which is very normal. Like they do that every 4,000 hours, some jets. But that can be very expensive. That can cost you $200,000, $400,000 per engine. So we don't want to be like, hey, investors, we know you just bought a jet, but also like we're going to need $800,000 to fix the 2 engines. Yeah. So we set aside cash and then that goes to pay for that.
Yeah, that's good. I'm glad that you said that, because that's one of the things that I think is not discussed enough. You know, you talk about kind of the cost of operating the jet alone. Fuel alone is a bitch. But then you've got these, you know, if you're using it, pretty significant annual maintenance fees that are no joke.
Yeah, I mean, the way we kind of get to our numbers is we calculate exactly how much it costs us, including, let's say, the loan service, including parking, insurance, pilot salaries, pilot training, like all these different aspects of the jet operating expenses, and we break it down per hour. What does it cost us per hour to keep this thing running? And so if that's like, let's say, $2,800 or $3,000, then we simply figure out what we have to charge in order to make this worthwhile. And if we can do it at market or slightly under, then we do that. Then that's a good model for us. But yeah, I'd say it's not unusual for us to have something that costs us between $2,500 and like $3,500 for us to operate, and then we charge, let's say, between $4,000, $5,000 per hour.
What markets are good and what markets are not good? Are there areas that you stay away from, that you say, no way am I touching a jet in, you know, rural Kansas?
No, there are. We just have certain hotspots in the US that we like. Yeah. So for example, I'd say the top 3 for us right now is like Tampa, Dallas, and Van Nuys, California. And that's just because of the people that we have there, the network. Like some people will literally request a specific crew in a specific jet. Remember, these are people not just because they don't want to fly commercial, like they have very specific requirements, and that's exactly what they want. And they want these specific snacks on board, and they don't want any of these, and they want this specific pilot to fly them, and they want that specific jet. Like even if we have similar models, like we could have 3 of the same model jet, and they'll request the specific tail number that they like, just because they like it for some reason. So it's stuff like that. Like it's just catering to those needs.
Okay, so you were doing a bunch of finding fun investments that lit you up, diversifying those investments, and that led you to creating an info product company to teach other people how to do this.
Exactly.
Before we got going, you told me that you were moving away from that. Tell me about the journey to get into that, and then why you've chosen to move away from it.
Yeah. So going into that, again, it was just kind of people asking me about my experience and, hey, can you teach me this? Can you teach me that? Can you teach me that? And I first started just doing one-on-one coaching. I remember somebody reached out to me and I was like, hey, like, you know, I don't really know what I can teach you on this, because I'm just doing it for myself. Like it's just, I like this and I'm doing it, and it's given me the ability to travel and do whatever I want because I have passive income. And he's like, yeah, like I'll pay anything, just like name your price. And so I gave him a price, and I was actually shocked that he paid me that. He's like, all right, it's wired. I'm like, what? Like, so I was like, then I was thinking, I was like, oh, what am I going to teach him? Like,
yeah, right.
Like, where do I even start? So I was like building the curriculum in my head, and I was like, you know what? I'm just going to tell him my exact journey. And that's what I did from the first investment that I did to the last one I did up until that point. We did a deal for a year. So I literally taught him everything. I met him on Zoom every single week, and we talked about the different investments that I did and everything that I liked or disliked about him. And it was just kind of an inside scoop. And over time that progressed to like group coaching and stuff like that. And I still occasionally will do a one-on-one student with somebody who's like very, very motivated, and I could see somebody being like one of my business partners or something. But for the most part, like I saw that the value in that was basically me being like the guinea pig of the whole thing. It's like, all right, Austin, you go out and try it for us and see if it works. And if it works, tell us about it. So it's kind of like, I was like the Yelp of investments, right? So I'm out here just doing things because I'm going to anyways, but then I'm losing money on some investments, and on some investments, I'm making money. And so basically all my winners, I would take them and put them into this program. And quite frankly, I would say out of my whole portfolio, probably only 60 or 70% of the things actually worked out. The rest, they either scammed me, or they never paid me out, or something went wrong, or like I'm still waiting to get paid out. Like there's a lot of things that didn't go the way I planned. But overall, for me, I see the value for somebody else to go through a program like this, because instead of them spending, I definitely spent millions on like different things that I lost. And it's better for them to just learn from my experience. It's like, well, I already got all the bumps and bruises. Like I already tried this. Like, why would you go and potentially be 60% profitable like I was and spend a bunch of money to figure it out instead of just like take the reviews that I have? Like, I'm sharing my experience. If you want to check it out, check it out. I'll tell you exactly who I worked with. And you guys can take it from there. So, it's not really, I wouldn't say like a referral thing. I would say more of like a review site where I'm like, it's a hub of all things investing and things that I liked and enjoyed and I had a good experience with.
Yeah, I think that that's a really interesting point to hit on, because there are sort of two approaches to, and maybe there are more, but two that I can think of for presenting information. Mm-hmm. And most people that sell information do it from the lens of, I'm the expert, listen to everything I say. There tends to be a ton of ego wrapped up in this. Mm-hmm. And then they're the dancing bear. And a lot of the time you find out too that when things are presented that way, whether they're full of shit or not, there are a lot that are not, right? And there's some that are, but you get scrutinized for every single thing that you say, because you're on the spot as the expert, right? And you're asked questions as the expert. Yeah. The other approach is to sort of learn from the journey. And I think that that's a really fun, authentic approach, because it's lower key, more relaxed. And then you're kind of allowed to make mistakes too. And you're like, I don't know, I'm just fucking figuring it out.
Definitely. I've definitely seen a lot of that. And that's very true, because then people are like, oh, well, this person is supposed to be the expert and they made sure that this works. So then the responsibility is on them that it works. And it's just kind of like a weird dynamic. It's like, well, no, I'm just doing this for myself and it worked. So you try it out too.
Yeah. Well, a lot of that's in the marketing message, right? If you sell yourself as the expert, then you kind of have to be the expert.
Exactly. Yeah.
But if you sell yourself as, hey, follow me as I go through this journey, the expectations are different, right? And what people are buying are different. And maybe this plays into the next question, but what do you not like about the educational space and teaching people how to do things?
Well, I think there are different segments of the educational space. I really do enjoy the educational space because it allows me to empower others with the experiences and the knowledge that I do have about these different things. And that's one thing I enjoyed. But one thing that I also realized is that many people aren't committed, or like they aren't like an all or nothing type of person. Like they're not gonna do everything they can to succeed. And that's very frustrating, because I can give them all the information in the world. I can give them all my connections. I could literally even fund their projects and they could still fail. Like even if I gave them everything they possibly needed and that I didn't even have in order to succeed, and they would still fail. And it really puzzled me for a while. I'm like, what's going on? Like, why are some people seeing so much success with less resources? And why are some people seeing less success with all the resources that they possibly have? And this is like, even like outside the program, it's like in real life, that's what it's like. And I came to a realization that people have to have a desire and a hunger to succeed that's bigger than their comfort where they're at right now. So that pain has to grow. That discomfort of their current position has to grow to be bigger than the comfort of staying there. And so until people reach that position, it's a big mindset shift. And so I I figured out probably a year or two into the process that it's really mostly a mindset thing. If they're not thinking like an entrepreneur, if they're not thinking like an investor, they're likely never going to succeed. And so first they have to make that change in their mind, and then they can make that change in their business. And so that caused me to move more to B2B, because it's like the hardest part of this whole journey is the mindset thing. If I can just find a group of people that have already made that jump, that have already like figured out the mindset piece of it, man, they'd make so much, like they'd see so much success, because I have a lot of experience that I can share with them, but they have to be ready to take it. Man. So you have to find hungry people.
I think that that's one of the most curious and most difficult parts of humanity, is that almost all of it is about mindset. Mindset is so hard to change without data points and references.
Yeah.
And that takes time.
Experience.
Yeah.
Yeah.
And I like to say that I'm very good at learning from myself after I've hit my face on the ground a few times. And I'm not very good at learning from other people because I need the reference points. And that is not good. I wish that it was different.
I've been there.
But that's the journey, right?
Yeah.
Okay, so tell me about today. So now Zelan Consulting is focused on B2B. What's the proposition? What are you doing and why are you doing it?
Yeah, basically now we're looking at a very different group of people. So now it's business owners. We're working directly with business owners, people who have made that mindset shift and they're ready to see more from their lives. So then it's us coming in and helping them grow their businesses. What I've found is that a lot of people who are, like, say, between $2 and $5 million in revenue, that's gross revenue, they've got a great idea. And some of them like accidentally made $2 million. Like, it's crazy how often that happens.
Yeah.
Like, they'll literally just come up with something and it blows up and they're like, oh my God, I didn't even realize that was a possibility, but they have no business experience. And in fact, they have no business running a business.
Yeah.
So that's where we come in and we help them with some of the structure, because at this point, I mean, I've been a part of the growth of many companies and I've seen what works, what doesn't work, like systems, SOPs, hiring, culture, like all these different aspects of business that are so important. And quite frankly, you could just install a framework into one of these businesses and give them a systematic way to sell and deliver that genius product that they came up with, and they'll hit 10 million or 15 million or more. Like, it's really just helping them along that journey. And that's so exciting to me, because these are people who have made the mindset shift. They're ready to be an entrepreneur. They at least have a taste of running a business, and you help them fulfill their business dreams. Instead of it being a high-paying job for them, you're helping create something that can actually run on its own. Once they hit 10 million, they have enough money to hire a CEO. Like, they could focus on, let's say, the creative part. I have a guy who's an engineer. He likes designing that specific product that he designs, and that's it. He has no interest in running the business, and he's doing like 5 million a year. Like, he's actually doing quite well, but he has no idea how to run a business.
Yeah.
And I'm like, dude, like, you have no idea what you have here. Like, this is a genius product. Like, this thing outperforms almost everything on the market, and you just, like, first of all, you have no exposure and awareness, but second of all, you don't even have a business. You have like 2 guys working for you.
Yeah.
And so anyways, businesses like that, it's just, I think it's amazing what can be done and how their business can totally be transformed to really be a machine. One thing that I learned is that when you're building a business, you're not necessarily building just a team or just creating a cool product or just creating excellent marketing. You're creating a system, like a machine. And the system is what's valuable. Like, if I were to go buy a company, I'm not buying the CEO or the people working there or their leads list or anything like that. It's all valuable. But what I'm really buying is the system that they figured out to bring in customers and successfully fulfill whatever service or product that they're selling to those customers. So the system is what contains all the value.
No question, but I think that a mediocre product with an amazing system far outweighs an amazing product with a mediocre system.
Oh yeah, definitely.
What's the first step when you come into a business from a consulting perspective to help them? Let's say you come into a $5 million business. What's your approach to audit it and see what you can do to make an impact?
Yeah, we have a whole onboarding process where we go through even just the basics, like what's your mission, what are your values, like what does your org chart look like? Like, we go through all these things, like just the basics of business, and it's like, okay, like we need to make sure we understand where you're at currently, and then see what's realistic for you to even grow to. And specifically, one thing that we've been doing recently is called an AI business growth audit. So we basically look at their entire tech stack and where they have automations and where they're using AI in their business. And we find ways for us to be able to either give them a templated tool or even sometimes custom build AI products for them where they can apply them to their business and become more effective at what they do. Because I think that's such an easy first plug-in for businesses. It's like, okay, you already know how to do like marketing, or you already know how to do sales, but how can we make it more effective? So we're either looking for ways to generate more revenue or decrease their operating expenses using AI. And so we go into the business, we look at how everything's running. What does the system look like? Where are the gaps? And where can we plug something in like AI to just make them more effective at where they're at currently? Then it moves on to more of like, okay, well, actually, we need to hire this person. And instead of using an agency here, we need to hire somebody in-house. And you need to have this running, you need to have that running, and we need to upgrade to a better CRM, like whatever it might be. Those are all, I'd say, later down the line.
Awesome.
Yeah.
Awesome, man. Well, if people want to find out more about Austin Zelan, where do you want to point them?
Instagram is going to be the best. So at Austin Zelan on Instagram.
Okay, so before we wrap, why is it on Instagram? So you've been basically pushing Instagram and everything through Instagram throughout the entire journey, right? From I don't know how long, but the beginning all the way through. Why is that the core mechanism versus anything else?
Well, I see it as my digital business card, because I have so many things that I do just because I like them. Like I'm involved in private jets and exotic cars and like media companies, like all these different things. It would be very difficult for me to really explain what that is and like on a website or, some sort of, probably most likely a website or like a business card or something. But for me, it's Instagram because I think pictures speak 1,000 words. And if you can take a look at a picture and be like, oh, okay, like I kind of understand what he does. For me, that's the most effective way. And it's a consolidated way to have all my audience follow along on that journey. Like if I am pivoting from coaching to B2B or consulting or AI or whatever it is, they can see that journey on Instagram.
Awesome.
Yeah.
Austin, it's been great, man. I appreciate you coming over.
Thank you for having me.
I hope you enjoyed the episode as much as I enjoyed doing it. I need your help. There are 3 places you can find Beyond a Million. The podcast itself, beyondamillion.com, which has some cool free resources, including a free course. And we finally launched the Beyond a Million YouTube channel. I would love it if you would go there and subscribe. And if you don't want to, you still would probably enjoy seeing the visual content. Check it out, youtube.com/@Beyond a Million.